I'd like to share something here. At the World Islamic Economic Forum in Dubai this year, the UK government announced on the panel which I was involved in that the UK Export Finance will be issuing a sukuk in the new year, which is great news. This shows there is momentum. In fact, something else I can share with you, the Chinese government is looking to issue sovereign and quasi-sovereign Islamic bonds, which will be in UK sterling currency, which is amazing news for UK and for London. You also mentioned the infrastructure for Islamic finance and investing into infrastructure and how important inward investment is for UK. You gave brilliant examples of the Shard and the skyline of London. You also mentioned the law firms, and I'd like to give that a number to that. There's about more than 25 law firms in the UK, in the City of London, which specialise in Islamic finance, with dedicated practices, with heads of Islamic finance, with budgets. We have all of the 4 accountancy firms doing Islamic finance, major investment banks doing Islamic finance. You also mentioned education and how important education is for Islamic finance. In fact, there is 28 different offerings of Islamic finance in this country, far more than any other country. And this is, as Lord Shaikh mentioned, both at undergraduate and postgraduate, in academic institutions and as professional qualifications. And I personally enjoyed listening to your principles of business, which you finished your speech with, and I think that those are very important. And something I've heard many years from you is keeping the eyes on your expenses. I think you drive that point home really well. So thank you very much for your remarks. I'd now like to invite Omar Shaikh, who is the chair and the executive head of Islamic Finance Council. His detailed bio is in the program that we have. All of you have that in your bags. Omar Shaikh has been a great champion of Islamic finance. I know that personally because as a Sharia scholar, I know he's doing great work in empowering the scholars, training the scholars in terms of professional education. Because it's all good having scholars who have Islamic knowledge, the jurisprudence, but it's important for them to have the knowledge of the financial industry, the professional services. And there's many other great work that he's been doing. Lord Shaikh mentioned the House of Lords and other things. So today he'll be talking about the enabling regulatory framework for Islamic finance. I'd like you all to welcome Omar Shaikh.
My Lord, respected Chairman, ladies and gentlemen, Shaykh, Assalamu alaikum wa rahmatullah. I welcome you in the traditional greetings of Islam. May the peace and the blessings of the Almighty be with all of you. My commendation to the organisers, the Son and his team, for putting together this fantastic event and for inviting myself to come and share some thoughts. I'm conscious most of us probably need some caffeine, so I'm going to make this very brief and focus on some of the key points on the theme of really what the regulators and the regulatory agencies need to consider when creating an enabling framework for Islamic finance. Just a quick backdrop to the Islamic Finance Council. We're established as a not-for-profit body to help build out the industry. By background, I'm a chartered accountant. I used to head the Islamic finance team at Ernst & Young in London. Myself and the other board members are all professionals in the legal space or in the banking space, and we contribute our time on a pro bono basis to the work of the council. It's not just the council, there's a number of other excellent institutions and individuals who've been working to develop the Islamic finance industry over the last decade plus. IIBI has been a very important institute alongside Markfield. Our scholars, our shuyukh within the sector globally have played a key role in developing the sector, along with a whole host of academics and thought leaders. Our fundamental belief is Islamic finance is a very young sector, and there is a need to invest in developing capacity within that sector, so that over the next 2 decades or so, the industry can become more robust and can build out and create a bigger pie for the various private sector organisations to fight over. We do operate in select areas. Lord Shaikh mentioned them. Two of the ones I just want to pick up on is, one is ethical finance. We're the only Islamic finance body that has been holding a series of structured, systematic roundtables focused on the shared values in ethical finance. The Edinburgh Roundtable series we've been hosting over the last 3.5 years. That also included the roundtable with the Archbishop of Canterbury in the House of Lords. I think this point is critical for our understanding of Islamic finance, and also for regulators and stakeholders and how we perceive the Islamic finance sector, alongside the commercial opportunities, but also in understanding Islamic finance. For those of you who are new to the sector, the ethical finance framework provides a very important backdrop and context within which you can understand Islamic finance. Focusing on the shared values will allow Islamic finance from a $2 trillion industry approximately to cross over into the broader ethical finance market, which is now well above, not towards 7 trillion plus, if we take the capital market side of that. There's a whole host of activity in the carbon sector and social impact bonds. If we look at the cooperatives and mutualized companies, the ESG, SRI movements and so on, there's a number of important strands and narratives there which Islamic finance can contribute towards and share its experiences and its insights as well. I think all of that is particularly important as we sit in a period off the back of the worst financial crisis we have seen in living memory, or probably since the beginning of banking for that matter. There's been a huge moral bankruptcy in the way we do our banking and conduct our banking. We've had huge systemic risk come to the fore, and many people, not least the Archbishop and the ex-chairman of the FSA, have referred to the lack of social usefulness in banking. So these issues, these fundamental issues, impact everyone, regardless of race, religion, ethnicity. And that's a debate which I think we are all going through. I don't think anybody has the immediate answer on the crisis of capitalism, but I think there's something there which Islamic finance and Islamic principles can contribute towards. The other element that we focus on is on government advisory. We've been formally appointed to advise a number of governments internationally on building out their Islamic finance framework. I did a lot of work with the UK government, and I think credit needs to be given to the late Sir Eddie George, the ex-governor of the Bank of England, who really actually started the work in Islamic finance in Britain over 14 years ago, when we had the initial working groups with the Bank of England in facilitating home purchase plans. Since then, we've had various initiatives from the Treasury, UKTI, Mansion House, etc., etc. Of course, the Prime Minister, the ex-Chancellor as well, Gordon Brown, and all of these have built London and UK to where it is today. The remarks made by Sir David, by Lord Shaikh, all of that is off the back of a lot of hard work over the last 14 years by a number of people doing such. So our specialism is very much in advising governments, primarily within a secular context. We've worked with European governments and African governments and the regulatory agencies that are within those jurisdictions in building out their Islamic finance framework. And in that regard, I wanted to just share with you some of the insights from our work and some of the considerations. I think I'll just skip through the overview of the market. I think that's already been covered well. Just the one thing I would like to mention, as we were talking about Bradford earlier, being from Scotland originally, being an adopted Scot, and I can put the accent on if you prefer. I don't know if you'll understand the word I'm saying, but there is interesting. The Scots have a habit of saying that we invented just about everything in the world, right, from the light bulb to penicillin and so on. But one of the things many of you might not know is one of the early attempts at contemporary Islamic banking in Medscomer in Egypt was a bank which was based on the savings bank model, which the founder saw was operating across Europe at the time. The savings bank model was itself actually founded, for those of you who are aware, by the great Reverend Henry Duncan 203 years ago from the Church of Scotland. So we can now formally say Scotland contributed towards finding contemporary Islamic banking. But again, I think that's a great example of the shared values that are so often shared values amongst the Abrahamic faiths and great world traditions, faith religions and traditions, which are so often obscured and discarded by the few differences that are there. So, for the next just 5-10 minutes, I'll just conclude on sharing some of our insights. 7 key points I wanted to share with you from our experiences over the last number of years on advising governments. Again, this is primarily aimed at those who are regulators or are engaging with the regulators and government agencies. I think the first thing, point number 1, is understanding the nature of the market and the nature of the market preference. Islamic finance, how do you size it up? How do you scope it out? Lord Shaikh mentioned when you're entering into a new market, you really need to go, or into a new jurisdiction, you need to go and understand that. So you have to understand what Islamic finance is, the nature of it, and so on. So the similarities with ethical finance, but also what does it mean in terms of your business and your business sector and your economy. So Islamic finance for the city is very different to the implications of Islamic finance to Western African governments that we've been working with. Financial inclusion is a huge imperative there. They don't have the capital market base that we have, and so on and so forth. The banking sector is not as developed. So across Europe, if you're looking to engage in Islamic finance, you need to understand that sector and what does it mean to you. I remember speaking to the head of, a number of years ago, probably 6 years ago, speaking to the head of private banking at Merrill's, and I asked her, why are you actually getting involved in Islamic finance? And her comment I found was epitomized the feeling in the market at the time. They saw it both as a defensive play, but also as an opportunistic play. Defensive because other banks were engaged and they were taking away their clients, so they felt they needed to have some kind of solution. And also an opportunistic play because it is one of the fastest growing sectors within the broader financial services arena. So you really need to understand how you size up Islamic finance and what that means to yourself. That local market tailoring, if it's agricultural society, if it's financial inclusion, and so on, that's something that you need to consider. It's very easy to fall into this Me Too trap. And when I was working, I still spend a lot of time out in the GCC, we find that tends to happen a lot. No, we want to be the global hub. No, we want to be the global hub. No, we want to be the global hub. I think that mentality needs a bit more, you need to look a bit more broader and a bit more, I would say, thoroughly at the sector. Malaysia is already a very well-established hub. Dubai, Bahrain also well-established. Pakistan, Sudan have been involved in the sector for a number of years, and of course in Europe we have the UK as well. So if you're going to get engaged in the sector, it's important to understand what role you will play and how that will be differentiated. I remember speaking to one of the regulators in West Africa, and they're saying, "Oh, we want to be the African capital, the centre for sukuk issuances in Africa." I was like, "Great, really ambitious. What is the size of your conventional bond market?" And he went very quiet because he had like one corporate bond issuance in the conventional market, right? So there needs to be a degree of contextualization and understanding of the market. Point number 2, political will. Political will, right? If I may borrow from my real estate friends. I think the great success of Islamic finance has been in Britain the concerted, systematic and continued support from across the various political parties for Islamic finance and the regulatory agencies. I can genuinely say I find in the different jurisdictions in which we have operated and engaged in, without that level of political will, the Islamic finance and its growth and development will be stunted or will be hampered. And I think that's a great thing about the city and about Britain. We've done that very, very successfully. And frankly speaking, guess what? That's the same for any new sector, any new element, any new sector within the financial services arena. You need a degree of political will, you need a degree of entrepreneurial leadership where they're willing to take the first step. And that reflects itself in point number 3, which are the structured amendments to the various tax laws and the various laws that you have. Islamic finance, by nature, some of its contracts, as was mentioned earlier, are asset-backed, and that can trigger certain consequences with regards to tax law. So I think there needs to be amendments, very clear amendments to your tax legislation to facilitate Islamic banking. You have the option to do that in a piecemeal approach, step by step, as the market evolves, or actually you can go and learn from what we've done in the UK and other jurisdictions and be a bit more comprehensive and structured. So we started with amendments to home purchase plans. We never thought about sukuk, we never looked at sukuk, we never had an idea about the implication of that. It was like 6 years later that we started making our amendments to facilitate corporate sukuk. So I think that's something which needs to be considered, and I think it also lends itself to a particular approach that we did very well, which was that we looked at the economic substance over the legal form of the Islamic transactions, and the view from the UK government was very much no special favours but no unnecessary obstacles to facilitate Islamic banking and finance. So in Islamic finance, where you have the ownership of a commodity for a few seconds, you have to really look through that and see what is this synthetic structure trying to achieve, and look at the economic substance over the legal form, and that will allow you to facilitate, I would say, more accurate amendments to your tax law. And obviously anyone from the tax side of the world knows making amendments to tax law is always very cautious. I don't want my old colleagues at EY, taking advantage of that to create tax loopholes and save a lot of money. Point number 4, clear regulatory guidelines. This sends out signals to the market. It gives confidence to bankers, to financial institutions, that they know where they stand. You have to have a view where you're going to see the role of Sharia scholars within the financial institution. You indeed need to have a view as to whether you're going to have a central Sharia board at the regulatory authority level with the central bank or not, and there are a number of considerations across that. There are other select issues, such as the treatment of profit equalization reserves, even sukuk. Initially, the conversations, the discourse was, is this a collective investment scheme, when we were talking with the FSA back in 2005, or is this a corporate bond, right? So what exactly is this? And there needs to be a synchronized understanding across the agencies for this. I think that's very, very important. You find scenarios where the Securities Commission is way ahead of the Pensions Authority, and their understanding is dislocated. So within your jurisdiction, I think the need to be synchronized across the different regulatory agencies is critical. Point number 5 is the provision of specific tools for the market. Islamic banks require money market tools and instruments, without which they are hampered. It impacts their profitability, but also impacts their ability to manage their risk as well. And I think that's critical for governments and regulators to provide that facility. I think one of the best things about the sukuk was, and the people who were crying out for the UK government sukuk, there was no one asking more loudly than the UK Islamic banks, who needed that paper to manage their capital requirements. And that was an issue which had been going on since many of them have been authorised since 2004. So the provision of select money market tools, I think, is critical. And the final 2 points I want to highlight from our experiences. One is people, skills, and capacity building. Fundamentally, you cannot regulate something which you do not understand, and it takes time to develop that capacity, to develop that understanding of Islamic finance. Building Islamic finance, do you build it within a secular context, or do you build it within a more overtly religious context? Does it fit within your existing guidelines that you have in banking and insurance and so on and so forth, or is it a whole set of new guidelines for that? So building the skills, the people, the capacity to understand that, to tweak the processes, to amend that is a very thorough and robust process, and it takes a lot of time to do such. That's why we have a whole host of ETQ leaders, which were mentioned earlier, about in terms of the qualifications and the training and the courses that we have. part of that process, conferences like this, roundtables, seminars, workshops, these are all critical elements towards doing such, achieving such. Bringing together these key stakeholders is critical, and I would highly recommend in your various jurisdictions you have that forum for engagement between the various stakeholders. One of the areas we've looked at specifically amongst the stakeholders, which Sheikh Allah mentioned, was Sharia scholars. Actually engaging with the Sharia scholars. They are critical to the development of the industry. They ultimately are the party that decide if a product is Sharia compliant or not. So engaging with them, ensuring that they are abreast of the latest developments, but also learning from them, using their insights and so on to help develop and market products, which leads me to my final comment, is critical. Getting community buy-in on the retail side of Islamic finance is critical, that you have the Sharia scholars who are synchronized in the thinking and are sharing the message. The reality is, when we talk about Islamic finance at the retail level, has not been particularly successful, I think, in the European context. And a lot more needs to be done. There is creeping cynicism, there is aspirational dissatisfaction of overly engineered products, and so on, and there is a confusion as to actually how does this work. Oh, okay, you charge me rent, but you don't charge me interest, but you benchmark the rent on interest on LIBOR. you know, people, guess what, tend to get a bit confused, right? When you go to the average person on the street and you give him a commodity murabaha structure, you know, he's going to think, you know, you're either been smoking something the day before, or this is extremely synthetic. So I think on the retail side, we have to accept these realities. We have to accept the challenges, and I think a lot more needs to be done on creating products which are more aligned with the true spirit of Islamic finance, and appeal to the masses, to everyone in society and everyone in the community. And I think that education and awareness definitely is a thorough process. You're talking about a decade-long process, really, if you do it in a structured, systematic way. And this is where a lot of different terminologies are used. I mean, very often the industry is littered with Arabic terminology. Well, guess what? The majority of Muslims around the world, just taking the Muslim community, they don't understand Arabic, right? They can read Arabic when they read Quran, but they don't understand Arabic necessarily. So I've been in scenarios where people have said to me, you go to kafel versus falafel, they don't have a clue. You know, what's the difference, right? So it's critical, if you're trying to educate the community, you're trying to market these products successfully, that you actually speak the language of the people that they understand, and try and genuinely present a product which is based on substance and something differentiated. So I think that's some of the challenges, and that, by the way, cannot be taken lightly when your agenda is financial inclusion. And that was one of the two key pillars for the UK government. But if you go into some of the African countries, you will see the unbanked is 90% plus. So financial inclusion as an imperative is critical. So speaking their language and understanding, you know, where they're from is critical. And I think that's really all I wanted to share. They're the 7 key points. That's just focusing on a few of those select things, and the final slide there just talks about some of the work that the UK government's done. But I believe those slides will be in your pack somewhere. If not, that's fine. As long as you've got the 7 key points, you would have taken some value, I hope. Anyway, thank you very much for your patience. I hope that was of use. Thank you.
Thank you, Omar. That's really insightful, and I like the jovial side of it as well, especially the takaful and falafel, which even made Lord Sheikh smile. I like the way you've summarised the 7 points, and it's key. I go around talking about those 7 points in 4 points, but you've detailed them out. For me, the 4 points are political will, regulatory framework, which is tax regulations and enabling legislation, intellectual capital or human capital, and institution building. Very important to have that, but Omar's done that really well. I also enjoyed the fact that you mentioned Arabic language, and yes, it's the language of Islamic finance, but we do need to demystify demystify that, and if we can use the equivalent in English, and maybe have the Arabic as a footnote, that will be useful. It gives people the source of what we're talking about, but we don't need to bamboozle people with the Arabic terminology. Political will is key, and I agree with you, and UK has done that really well in terms of the support from the top, and having the regulatory framework. I think the other key theme that I enjoyed listening to was the form versus substance, and you're right, not only from a regulatory perspective, but also from the cynicism on the street. It's all about form versus substance. Is this just a form, or is there any substance behind it? And as you know, lawyers, we look at the legal form, and accountants probably look at the substance, the economic substance, the economic profile. But really, your Joe Blog on the street will look at the substance. And for them, if it doesn't make any sense and it's just smoke and mirrors, we need to educate them and clarify this. We have learned scholars here, Sheikh Haytham Tamim sitting at the back, who do great work in disseminating this information and educating people. So all in all, I think Omar's covered a great aspect of Islamic finance. He's mentioned the ethical side, and importantly, he mentioned the crisis of capitalism and Islamic principles. The key thing to take away from this is Islamic principles are universal values. Universal values we all believe in and share in, whether there is transparency, consistency, disclosure, sharing of risk and return. No matter which faith you're from, we all believe in that. And I think if we have that, more of that in Islamic finance and general finance, it will make life much more easier. I'd like to, before we go for the break, just to ask Omar to come back to the stage, and if we can take some questions from the floor, and then we'll break for half an hour. Omar, please. Can you, I think we've got a roaming mic somewhere here. Can you put your hands up and tell us who you are, your designation, your company, and what your question is? Please make it a question and not a statement. If it is a statement, then a very short statement. Thank you.
Right. Eleanor de Rosmodic from Luxembourg for Finance. Pretty well every speaker this morning has talked about the need for cross-selling and the ethical value of Islamic funds. And this is very urgent in the investment fund area, where far too many funds haven't reached viable size. One of the reasons for this is people don't understand the values of these funds. Islamic principles include the notion of stewardship of the environment and social engagement, but it's a well-kept secret. And if it weren't for the case, then companies like Sedco and Arabesque wouldn't have signed up to the United Nations Principles for Responsible Investment. So my question is, we've got representatives here from all these European countries. Wouldn't it be a good idea today to sit down together, maybe try and come up with a solution, a stamp or something that could be given to Islamic funds to say these funds have corporate social responsibility, because the UNPRIs are self-declaring, and so I mean Luxembourg's kicked this idea around. We'd like to do a stamp, but I don't think this should be something that one country should be doing. We should be doing it all together. So I'm just issuing an invitation to the other members of the community here. Couldn't we sit down together and come up with some kind of a communal label that would make it easier to cross-sell these funds?
Thank you. Yeah, and that's really welcome. I think Omar will agree.
Yeah, no, absolutely. We had as part of our roundtables just last month. We had a roundtable with Standard Life and SWIP and Franklin Templeton in Edinburgh, talking about stranded assets and some of the other funds. The chaps from SRI or Econ Research were there. From Germany, who I was with in Liechtenstein just a fortnight ago, and actually the exact same point was kind of brought up there by the chaps from SRI, that creating one standard. Of course, working multilaterally across the different jurisdictions is difficult. Islamic finance very much developed itself, its asset management sector within its own realm of jurisdiction, without really actually being cognizant of what was going on within the broader SRI world, which we know has actually also evolved as well significantly over the last decade. And we're just off the back of Good Money Week, which was just a fortnight or so ago, and I think a lot of that was picked up there. But I think within the asset management side in Islamic finance, absolutely there's a need to look across at some of these standards and get these standards. But also there's also trends now towards positive screening and not just negative screening as well, which I think needs to be considered. Measuring social impact is still problematic. There is no singular measure for that, and I think indeed trying to create a global standard for that is also an issue as well, where I think in each region there is an argument for that to be localized and specific to that scenario. But absolutely agreed, it's something which if the Islamic asset managers can consider, it would only build out their commercial opportunities for them. I mean, a great thing we saw, which again I would say Islamic finance tripped upon, it wasn't by design a decade ago, it was a lot of, after the financial crisis, a lot of people didn't realize a lot of the Islamic funds all of a sudden became top quartile performers. And everyone was like, okay, this is very funny, this is a funny name, this fund, let me have a look into this, a Sharia compliant fund, what's this all about? It had the ethical screen, but the other interesting screen was the leverage ratios, the restriction on the amount of leverage. And as a result, as many people know, during a financial crisis, when your turnover gets hit, all of a sudden you'll find you start coming very close to your interest debt coverage ratios, and that creates a lot of stress and pressure on the share price. And a lot of the companies that were overly geared got hammered, and they struggled. Indeed, the mainstream financial services sector also got hammered as well. And guess what? Surprise, surprise, both of those were by default screened out either through the sectoral screen or through the financial screen, resulting in a lot of the Islamic funds being top quartile performers. And since then, some of my friends in the city and in New York have actually been applying the exact same techniques on financial ratios. They don't necessarily have the 1/3 debt to equity ratios, but they've been playing around 20%, 40%, and so on. And I think a lot of those experiences are things which Islamic finance can share if they begin that communication and that narrative between the two worlds which you referred to. So absolutely a great opportunity in that space. And I think Islamic finance has got a lot to contribute to that from its experience, especially in the financial ratios as well.
Excellent. No, thank you for that question, and thank you. Can we ask? Can we have the mic here, please?
I just want to make this point that Eurozone countries are suffering as a result of recession. United Kingdom is doing very well. We expect our growth to be about 3%. But the point is, there are opportunities in Europe as well. If you can choose your investment, undoubtedly, because these countries are crying out for investment. So there are opportunities for Islamic funds to look at what's going on in Europe. Pick where you're going to invest, and I'm sure if you got your strategy right, hopefully when the country's economy do turn, then hopefully it should do very well. Undoubtedly, I'm here to promote United Kingdom, of course. United Kingdom, we are finding a lot of people coming into this country, buying properties. I have a flat in central London, I don't want to sell it, but over the last 3 years it's gone up by about 100%. There are plenty for the United Kingdom, but I think also Islamic funds should look at what is available in Europe as well. Thank you.
Can you tell us who you are first?
Yeah, my name is Dr. Ali Khurshid from Academy UK and Reading University. Omar, you did mention that you involved with training Sharia scholars. What are the main weakness you did notice with the Sharia scholars when they come for training?
So we spoke with senior Sharia scholars around the world to take their advice on putting this program together nearly a decade ago, around 8-9 years ago. And what we found was, I wouldn't use the word weaknesses. I would say actually it was a natural inherent limitation of the knowledge. So for example, when I was at Ernst & Young, we would have, or any law firm for that matter, you would have partners specializing in each of the different areas. So if you would go to one of the partners who specializes in insurance and ask him to tell you the details about one of the derivatives contracts, or ask that partner to tell you the details about tax or about real estate, there's actually unrealistic and unfair and an undue expectation placed on that individual. Where Sharia scholars were being asked to opine on a fatwa for a real estate fund, for a banking product, for an insurance product, for a structured derivative, and so on and so forth. So actually the challenge for them was significant and huge. And also you have to bear in mind the world in which they come from, either from the Darul Ulooms and madrasas or the different Islamic universities. they haven't necessarily been exposed to mainstream financial services. So even a lot of us, I mean, I can't claim to be, I focus on private equity, got a background in audit, I can talk about that, but if you ask me to go into the depth of insurance, there's people like Lord Shaikh who've worked in that space who should do that. So inherently what was being asked for the scholars was really unrealistic and unfair, but it was a real challenge that they were dealing with. And also the approach that we took, Dr. Ali, was on continuous professional development. So we talked about, again, anyone who's a member of a professional institute will have to sign off every year that he or she's done 15 or 20 hours of continuous professional development. And the intention behind that is to update your knowledge on the most contemporary issues. So today we can talk about securitization and these subprime mortgages. If we talked about that 20 years ago, the discussion would have been very, very different. So that was some of the issues and the weaknesses that we found, that where they were coming from or was not necessarily exposed to financial services in its broad way, but also when you're in financial services, it was unfair because their expectations, the demands that was put to them were huge. And many people like to take pot shots at the scholars in the industry, and they have their reasoning for doing such. But our view, and you hear all sorts of remarks about scholars and XYZ, you know, scholars for dollars, blah, 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 right, all of that. But actually our view is what they've done is immense. What the work they do, they sit at that juncture which is critical to the industry and the development of the industry. And our view is rather than continuing that narrative, actually what can we do to support and to help and work with our respected scholars from around the world. So we've been delivering this program in Malaysia with the Central Bank Body Isra, with the Central Bank of Nigeria recently. We had 30 of the top Maliki scholars from West Africa, and we actually got Sheikh Isam from Bahrain to speak to them about contemporary Islamic finance practices, not just conventional finance, but we brought that in as well. So there are a number of challenges, and I think managing that space of Sharia governance and the Sharia scholars and the individuals and some of the personalities is a real challenge, but critical for the industry.
Yeah, I can speak to that. Do you have mic here, please?
I'm a peer. House of Lords is self-regulatory organization, self-regulatory body. Something I'm very, very keen on, and that is perhaps the scholars should think about founding an international body whereby they regulate themselves. I think this is important. Something I think ought to be, perhaps it could be in the United Kingdom, and that could be extended worldwide.
Perhaps, and obviously Sheikh Bilal and Omar, perhaps we could take this agenda further.
Yeah, thank you. We're just conscious of time, and that's where my neck is on the line, as someone who's moderating this session. And I've got to be not just Sharia compliant, but timely as well compliant. I know there's hands being raised all over the place. You'll have opportunities to ask these questions, hopefully in the follow-up sessions. And the theme is kind of a running theme which goes through all of the sessions. Just to add, on Omar's point, as a Sharia scholar, I understand the point. You know, personally, I've had the great benefit of working as a practitioner in the industry, but not many scholars have. And if you don't have that, you know, you understand only the jurisprudence or only the academia, you're not going to be able to understand the intricacies of leverage finance, restructuring, insolvency law, taxation, banking, and there's all forms of banking as well. All forms of funds and asset management, insurance goes into various subgroups. So it's a great job, and I can pay homage and testimony to what IFC and Omar's doing under the patronage of Lord Shaikh. So we've got